Senator Bernie Sanders recently revealed his plan to cancel all student loan debt. Not $50,000 of it, all of it. Now, that's a bold proposal, right? I'm in favor of it because, look, I see the impact that student loan debt has on our generation. We're over $1 trillion in student loan debt. It's a major drag on millennials and the economy, and not just millennials, but, many other age groups that are also continuing to pay on their student loans. So now, while people are drowning in student loan debt and are looking for a presidential candidate, somebody like Bernie Sanders or maybe Elizabeth Warren, to at least throw them some sort of life preserver, there are people out there that are not quite happy about the way Senator Sanders specifically wants to pay for his debt cancellation bill. Now, Grit Post recently reported this on Monday, that the proposed debt cancellation plan would be funded by a small financial transaction tax. That's an FTT on stocks, bonds, and derivatives. Now, Senator Sanders says that would raise about $2.4 trillion over the next 10 years. So that's a pretty good haul. And of course would help out, again, millions of Americans would no longer have student loan debt. And not only that, but colleges and universities, at least public ones, would be tuition free. So you would no longer have a need to cancel any student debt, as there would no longer be any student debt. Again, great plan, right? But unfortunately, investors are very unhappy about this plan. In fact, Bloomberg reported that investors are already complaining about the possibility of having to pay higher fees for trading and getting lower returns on their investment as a result. Now again, this financial transaction tax, you know how much it would be per transaction? 0.005%. 0.005% on each trade. That's not very much. But again, they deal with such high volume trades. Look, these are the people, of course, who sit in their offices and push a button all day. Like, oh, I just made a trade. Oh, I just made 4 trades. It's mostly done with computers these days and algorithms that analyze the market. And all it is this, they ask you, hey, you want to trade? You want to make this trade or whatever? Okay, go ahead. So, but nonetheless, these people who apparently work very, very hard are like, no, it's too much. In fact, traders also say that the cost of an FTT could be passed on to mom and pop investors, like those with pensions and 401ks, and end up changing investor behavior. So now, investor behavior, now that's an interesting question, right? So, if we change investor behavior, would it be a bad thing or a good thing? That's the question, right? But first, before I go to that, here you have Interactive Brokers chief strategist Steve Susnick saying this, quote, 50 basis points on stock trades would severely crimp liquidity. Market participants might move to options for the lower tax rate, making them more liquid than the underlying stock. And I'm assuming that that's a bad thing, right? Now, he said a tail that wagged the dog, that much would become very unstable. So he's talking about stability in the market. You know, the market's already kind of unstable. In fact, it seems like every few years or a couple of decades at least, we go through a boom-bust cycle where we have a massive recession or a depression. Weird. Oh, but no, doing this would make it more unstable. Really? Look, the thing is that Wall Street is pretty much completely divorced from the economy of Main Street. And right now, they're pretty deep into financial speculation, stock buybacks, and even some of the implements that brought us to 2008 financial crisis. That was, of course, the beginning of the Great Recession. One of those is derivatives, right? Now, derivatives are high-risk investments that, a lot of companies ended up using to get very, very rich. Now, the problem with derivatives is that they're highly unstable. Now, Bernie Sanders, he would tax derivatives at 0.005% to fund debt cancellation. Now, why is that a good source of revenue? Well, because derivatives have exploded over the past few years. In fact, in 2018, Investopedia estimated the derivatives market could be worth $1.2 quadrillion. Do you know how much that is? That is actually 10 times the size of the global economy. 10 times. If that market crashes, that's it. Global disaster. And in 2014, the four biggest American banks, JP Morgan Chase, Citigroup, Bank of America, and Goldman Sachs, held nearly $220 trillion in derivatives. That's also more than the entire global economy, which I believe is around $80 trillion, if I'm correct. So if we have a crash in derivatives, even in the United States, we wipe out the global economy. Does that sound stable to you? Does that sound like, or does it sound like something that we should change? Well, if you said change, then there are economists out there that agree with you. In fact, more than 1,000 economists have signed on to a letter calling for a financial transaction tax at the G20 summit in 2011. They say that such a change in investor behavior is sorely needed. Now, let me give you some signatories of this. They include Jeffrey Sachs, an advisor to former UN Secretary General Ban Ki-moon, Harvard University economist Danny Roderick, and Cambridge University economist Ha-Joon Chang. They added that the UK already has such a tax in the economy, and guess what? They haven't been harshly affected. In fact, according to the letter, the financial crisis has shown us the dangers of unregulated finance, and the link between the financial sector and society has been broken. It's time to fix this link and for the financial sector to give something back to society. Even at the very low rates of 0.05% or less, this tax could raise hundreds of billions of dollars annually and calm excessive speculation. The UK already levies a tax on share transactions of 0.5% or 10 times this rate without unduly impacting the competitiveness of the City of London. Now, the Economic Policy Institute also supported a financial transaction tax back in 2006 when they did the study. Researchers wrote that even if the revenue raised from such a tax is negligible, financially, incentivizing investors to not engage in high-frequency, high-risk trade on financial instruments like derivatives would be a net positive for the economy. In fact, the EPI wrote, quote, much evidence strongly suggests that the marginal value of financial transactions in the U.S. economy are near zero, or even negative. If this is true, then U.S. households would strongly benefit from an FTT, even if it raised very little revenue. In fact, in the case of zero marginal value of financial transactions, every dollar crowded out from financial transactions by an FTT would boost American households' incomes 1 for 1. So basically, these economists are saying we should do a financial transaction tax. Whether or not the revenue goes to, canceling student loan debt, or for infrastructure, or for healthcare, doesn't matter. It turns out that the effect that it will have on the market, it will actually be a very positive one, and will help out in trying to dissuade some of the most, I guess, risky financial trading that's going on in the markets that could lead to another financial catastrophe. So it's good policy for banking, and canceling student loan debt, it's even better policy. It's a win-win unless you're a big bank. I'm guessing that, of course, this is why the banking industry, you have all these anonymous quotes from bankers and from people working in finance saying that Bernie Sanders is their number one enemy. He is the man that scares them the most. Why? It's because Bernie Sanders is the man that comes and knocks. And that means that they will do anything that they can, including funding politicians to try and derail him, or funding think tanks to derail his studies, or going on cable news shows, whatever. They will do everything that they can to defeat him so that they continue to make gross, obscene profits. Hey guys, hopefully you enjoyed that free video. Now I'm going to have to ask you a favor. Between the demonetization and the YouTube algorithm messing around with view counts, etc., we're having a hard time adjusting to the new YouTube reality, which is where you guys come in. See, we have a Patreon, patreon.com/TYTNation, set up to help us rely on you guys, the viewers, instead of big corporate ads. Look, you know the show. You know I'm not in favor of big corporations anyway. So help us transition away from relying on the ad model to pay the bills and sign up to be a patron, patreon.com/TYTNation. That goes a long way to help us keep the lights on. And you guys will know that you're supporting independent progressive media.